Hey, what is up, everyone? This is Evan Carthy from evancarthy.com, and today this is going to go over the what is intraday trading blog post. This video is going to be real quick strategy from the basics of the way I trade for my setups, and what we're looking at right here. This is just 2-minute chart for the continuous contract with S&P 500. So I just want to show real quick what the basics is for my trading strategy, because if you are looking to get into trading, whether it's intraday, which is same thing as day trading, or swing trading, or holding it for days, holding it for weeks, months, whatever, you have to start somewhere as far as your trading style and what you want to do. So basically, after a ton of trial and error over the years, this is what I am have been currently using, and continue to build it from there. So basically, what it is, it's just taking the anywhere from the 38.2% down to the 61.8% trade, and then looking to get out somewhere around the 1.272 Fibonacci extension area. Now, it is going to be a little bit different because I'm not going to go into 100% all the way the depth for it, because currently what I'm doing is there's a trading system called the Trident Trading System. It's this old school book that I read the other week, and it is basically the same setup, but it adds on to it as far as like your entry. Basically, your entry, instead of just waiting it to come down and hitting one of these areas right there, it hits it, and then you wait till it comes up about 25% more before you get in. Then it has another algorithm to dictate where the target area is for it. That gives you another target exit for it. So, and then a couple other videos, I think previous to I did one about oil, I go into more detail about it, but this is basically just going to be over the very basics for a trading system or trading style if you are looking for your first one. So basically what it is, you'll need to get your Fibonacci Fibonacci set up right here. See down here, there's a 100% level. In fact, let me go into the settings so you can see everything that it looks like for right there. So there you have the 0% line, there you have the 1% line, there you have the 61.8%. There's the 38.2% line right there. And then now here is the difference right here. Most people use a 50%, but I went and did a bunch of calculations, and again, that's in another video regarding Fibonacci retracement and extension levels. And one of them I found out that was the square root of them was the 0.4859. So instead of using the 50%, which in truth isn't actually a Fibonacci number, I use this one instead. So close enough to it, but just a little bit difference in it. And then you'll see that I have this is the 1.272 extension line right here, the target area that I look for. And the reason why this is negative and this one is positive down here is when you draw the Fibonacci lines. Let me just show you the way I draw them, going right there. So you'll have 38, pretty much 50%, 61.8. The target area I'm looking for is up here. So if I just use the positive number, which is down here, it'd be the opposite way. So to make it easy, and I don't have to redraw Fibonacci retracement and extension area twice for the same setup, I use the negative numbers because it goes for the right way for it. And so you have to like subtract 100% from it. So on the positive is 1.272, but for the negative area it's a negative 0.272. And then just for to make it a target box, I use a negative 0.414. What that is, it's a square root of 2. And so that's how you get that number for it right there. And then there's the positive side, 1.414 right there. You can see it right here. What that basically just creates a target area that I'm looking for price to hit when I'm in a trade, or some other things as well. And then I think that's about it for the trades. You can see a bunch of other stuff I mess with over time, but those are the main ones right now that I'm using. So it's pretty simple when it's all said and done. The issue that this trade has is you always want to be in the direction of the market, obviously, just like every trade. But this, for instance, you really have to make sure, and this is where all the time and effort comes into figuring it out, is which way is the market headed? Because what you're looking for is you're waiting for a retracement to come back. Like here's a trade right here. So using this swing low right here, which is about at 3011.25, this swing high up here, which is about at 3033.75. What I would be looking for right here is, and we're just going to assume the trend has been up. Obviously right now it isn't up, it has been down since the end of this day, but let's just assume we're expecting price to go up. So what I'd be looking for is price it's come down and hit the 38.2% line right here. This is the first one I'm looking for. The reason why it's a little bit different color, that teal color than the green, is just to alert me that the 38.2 has been hit. So it hit it. So there are a couple ways to enter from it. One of the ways you can do it, it's called a second entry, and this is from the article what Mac and his price action trading, how they used to trade. There's a couple different ways to do it. The way I personally use it, there's two ways to do it. The first way is you see this low down here. Price has hit the 38.2% line right there, so there's the low. Now when price first breaks above that, that's going to be the first entry. So you see the candle, there's the low. This next green candle, it broke out above it right there. That's the first entry. Now, what you're looking for a second entry in getting this trade is you're looking for the next candle to pull back and not go higher than this candle. Now, here's the next candle. Obviously, did that not happen? So we're still at the first entry. Again, there's the low. There's the first entry because this this candle went higher than that last candle, and now which was the pullback candle. That was the low. So it went higher than it. Now this one went higher, did not pull back yet, so we're waiting for one more pullback before we can go long in it. There it is. There's the next candle that pulled back. So the next candle that goes higher than this one, or it just ticks higher, is going to be the entry. So there it is right there. You see this next candle right here, it did tick higher, so that is the second entry in it right there. Obviously that trade would not have worked right here for it, but I just wanted to show that that is one of the ways to get the second entry. So then you have the low right here, price goes higher, price specs higher, first entry, still higher, retraces back, there's the second entry. Now there also is one other way when it's a little bit different to get in for it. What you're doing is, so you have a low, you're going up, going up, going up. Okay, so now what you're doing is, as long as price doesn't break this high and gives you two entries to it, that is, or two pullbacks with two higher candles, that's going to get you in. Let me show you real quick. So you have the pullback low right there. It goes higher. There's the pullback. There's the first break. This candle right here is higher than that candle, so that's the first entry. Now it's going higher again, going higher, but then this candle broke this one, so we start the count over again. So there's your top of your candle right there. So we're waiting, lower, lower, same, same, same. There it is. There's your second entry right there. Oh, I'm sorry, that's your first entry. There's your high, lower candle, not higher than the previous, not higher than the previous, lower, lower. There's your first entry because this is the first time that this candle overtakes the previous one to the left. So that's your first entry. Now you're waiting for another pullback and then another candle to go higher than the last one, and that'll be your second entry long. As long as it doesn't break higher than this candle, then you'd start your count over. So we have your first entry right here. There's higher, higher. Okay, there's a lower one right there. Lower one right here, and here is a candle right here. So if this there it is right there. Look at that, perfect timing. Wow, I couldn't have done that better if I was trying to. That candle broke higher than that one. That is where you'd get long right here. One tick higher than this candle right here. Then excuse me, this is red candle. You'd put your entry one tick higher. You would have gotten filled right there, and now you're in that trade right there. So that's another way to do that second entry right there. It is a little bit safer, obviously, than the first way, but you will miss out on some trades if you do it that way. So again, let me just do it one more time, because I know it can be confusing with it, and especially probably the way I'm describing it, it's probably not the best either. But so the first way is if you count off the low. So here you have the low right here. It also hit the 38.2% line, which is what I look for. There's your first entry. Candle broke higher, higher. There's the pullback. There's your second entry because this candle right here broke higher than that candle. That's your second entry. Now, the other way of doing it is you count off the highs after the 38% have been hit. There it gets hit. So we're waiting for a high and then pullback. There's the high, pullback, first entry, still higher, higher. This one went higher than that previous high, so we start the count over. So lower, same candle, lower, lower. There's a higher candle right there than this one. First entry, higher, higher, lower, lower. There's higher. That's the second entry right there. That's where you'd get in. Now the stop, where I would have my stop, is it'd be about a point lower than this candle right here. So the candle you get in on right here, depending which one's lower, whether it's this candle or this candle, whichever one's lower. I usually have my stop at around 1 point lower if I'm trading the S&P 500 than where I'm in at. So at 3020.5, I would have my exit. Let me draw the line right here at 3019.5. So it comes down and takes me out. That stops me out of the trade. But the exit I would be looking for the most part, would be up here around 3040. Again, it probably would be slightly different from using the Trident trading system based upon the Excel spreadsheet. Let me just show you here real quick. Algorithm that the guy recommends in his book for it, which I found out works pretty well for me. There it is right there. You can put the inputs in there and it spits out the entry price, the critical price, the target you're looking for. But that's a little bit more in depth than this right here. This is just a lot simpler way to test out to see about getting in there. So what this does is this ensures that you're not going to get just totally ramrodded by like one of these moves where it just drops straight down right here or goes straight up where you had the other way. So like for instance, say you were looking to, from that move right there, you're looking to yeah, we'll just use that one. That's fine. So you're just looking to go short right here. Well, in the past, I would just put like a blind short entry right there. But as you can see right here, price just went straight up, barely paused right there, and Kenny went straight up again. It would take me out, kill me right there. So what this does is it helps filter out your trades a little bit right there. Not only are you waiting on price to come back to a Fibonacci level, which in itself, nothing has to happen from it as well. It's just a lot of people to use it to trade. So you're using that in your favor, plus you're waiting for at least some decision in the market to go your way, or to go your direction, because showing it right here, whether you're using count off the lows for your entries or count off the highs for the entry, there's at least some impulse going in the direction of the way that you are looking to trade. And so that's basically right there. That's the simplest form of the trading style right there. Like I said, the one I'm currently using is a little bit different, but this is a great first way if you are looking at creating your own systems for trading. It provides the entries you need, the stop loss you need, and also the target levels. And so those are basically the three things when you're looking to trade these markets: stop loss, how to get in the trade, and then of course the most important, where your exit is and where you're looking out for the trade. It gives you some direction. Now test out for yourself. If it don't work for you, don't want to use it, no problem at all. The key is to find out what works for you, and what I mean by what works for you is what makes you money, and then build on it from there to make it even better for you moving forward. But hopefully that helped, and that's my main strategy for trading basically all the markets I trade right now, because I just have one style that I stick with, and that's my trading strategy. So hope that helped. Let me know if you have any questions. Like I said, you probably came here from my blog post, because the video is going to be embedded in it regarding intraday trading. So good luck out there. Take care, and talk to you later. Bye.